Hello and welcome to Smart Finance Investor. Today, we are delving into a topic that affects investors worldwide: the impact of global events on Indian stock markets. In an increasingly interconnected world, understanding how global events can influence Indian markets is crucial for investors. Segment 1: The Global Economy and Indian Markets. In this pivotal segment, we explore the intricate relationship between the global economy and Indian stock markets. The global economic landscape wields significant influence over India's financial markets. Key global economic indicators, such as the GDP growth rates of major economies, inflation levels, and global interest rate movements, can have a cascading effect on Indian markets. Shifts in these indicators reverberate through Indian markets, as they impact the demand for Indian exports, ultimately influencing the performance of Indian stock prices. Furthermore, currency exchange rates play a pivotal role in this dynamic. Fluctuations in the value of the Indian rupee vis-a-vis other major currencies can significantly affect the profitability of Indian businesses. A weaker rupee, for instance, can make imports costlier, impacting various sectors. To navigate this complex terrain, investors must comprehend how changes in global economic conditions can ripple through Indian markets, impacting investment decisions. Understanding this intricate interplay is essential for anyone seeking to make informed investment choices in an increasingly interconnected world. Segment 2: Geopolitical Events and Market Sentiment. In this segment, we delve into the crucial interplay between geopolitical events and investor sentiment, and how these dynamics can profoundly affect Indian stock markets. Geopolitical events encompass a wide spectrum, including trade tensions, military conflicts, political upheavals, and diplomatic standoffs, occurring across the globe. One of the most significant impacts of such events is the shifting sentiment among investors. When geopolitical conflicts or crises escalate, uncertainty permeates the global markets. This heightened uncertainty often prompts investors to adopt a more risk-averse stance, leading to capital flight from emerging markets like India. The consequence? Increased market volatility and potential price declines in Indian stocks. Foreign institutional investors, who play a substantial role in Indian markets, can be particularly sensitive to geopolitical events. Negative global sentiment may lead FIIs to reduce their exposure to India, affecting market liquidity and stock prices. Conversely, positive global sentiment can attract foreign capital, bolstering Indian markets. Recognizing intricate relationship between geopolitical events, investor sentiment, and market movements is essential, as it helps respond to the ever-evolving global landscape effectively. Segment 3: Global Industry Trends and Indian Sectors. In this segment, we explore the profound impact of global industry trends on specific sectors within the Indian stock market. The global economy is marked by dynamic trends that significantly influence Indian industries. First and foremost, the global technology landscape, particularly in the United States, has an outsized influence on Indian IT companies. Changes in technology trends, outsourcing demands, and regulatory developments in major tech hubs directly shape the fortunes of Indian IT stocks like Infosys, TCS, and Wipro. These companies' performance closely mirrors global technology trends. Similarly, fluctuations in global energy and commodity prices have wide-reaching implications for various sectors in India. Industries spanning energy, manufacturing, and infrastructure are closely tied to global energy prices, especially oil. Variations in oil prices can directly impact the financial health and stock prices of companies in the oil and gas sector, and related industries such as transportation. Investors keen on navigating Indian stock markets should grasp how these global industry trends intersect with specific Indian sectors. Understanding these dynamics enables investors to make informed decisions and capitalize on opportunities presented by evolving global trends. Segment 4: Economic Policies and Reforms. In this pivotal segment, we examine the far-reaching implications of international economic policies and reforms on Indian markets. The global economy is subject to a complex web of economic policies and reforms that have a significant impact on India's financial landscape. Firstly, trade agreements and policies, especially those involving major economies, have a profound influence on Indian industries. Alterations in tariffs, trade agreements, or trade tensions can drastically affect the competitiveness and profitability of Indian businesses, thus influencing their stock prices. Industries heavily reliant on exports or imports are particularly sensitive to these changes. Secondly, international financial regulations, tax policies, and compliance standards play a pivotal role, especially for Indian companies with global operations. Companies adept at navigating and adhering to international regulations may experience more favorable stock performance. Understanding the intricate interplay between international economic policies and Indian markets is crucial for investors. It enables them to anticipate potential market shifts resulting from policy changes and reforms, and make informed investment decisions in a dynamic and globally connected financial environment. In conclusion, it's clear that the global stage has a significant influence on Indian stock markets. Investors should stay informed about global events, economic indicators, and industry trends to make informed decisions. Remember that while global events can introduce volatility, they can also create investment opportunities. If you found this video insightful, please give it a thumbs up, subscribe to our channel, and hit the notification bell to stay updated on our latest content. Investing in global markets is a dynamic journey, and understanding the impact of global events is a crucial part of that journey. Thank you for tuning in today, and we'll see you in the next video.